Afternoon, everyone. Hope you all find this very informative. This is a very new presentation that I've developed for networking and helping business owners when it comes to mortgages. For the self-employed, we're going to go through some case studies, just some general bits of information as to what banks are looking for, because the whole thing about mortgages for the self-employed that's different to the mortgages for employed people is about making sure that the income that the self-employed applicant is generating is sustainable for the term of the mortgage or over the next 5 years, so that the bank can move forward with it and they can be satisfied with it. Just a brief introduction to me. My name's Andy Docherty, whole of market independent mortgage advisor. I'm part of the finance family. They're based in Womben. They're directly authorised by the Financial Conduct Authority, which means that we're not attached to a panel of lenders. We can actually go to every provider that we can get in terms of the UK market. I've been working in finance since I was 19 for Barclays Bank. I was working in and around the branches before leaving there, doing a couple of other things before returning to NatWest around about 2016, where I went into mortgages to be advising since 2018. Okay, so what do we do as standard brokers? Pretty much in terms of, it's what it is saying in the tin, in terms of all different mortgage transactions, from remortgages to first-time buyers, also buy-to-let for personal and limited companies, as well as looking at sole traders, limited company mortgages as well for the self-employed, and also adverse credit defaults and county court judgments. Lenders will have different criteria for each of those and different timescales. So if you were unfortunate enough or something happened to have that on your credit file, again, it's not the end of the world. It's something where there may be somewhere out there that can help you. So the challenges and objections to self-employed mortgages. So this is the same really as it is across everything really with mortgages, is how much can I borrow? So with that, if you were to come directly to me at NatWest, I'd be able to tell you pretty much what I could borrow in terms of as a bank at NatWest. And that's not necessarily the case for the whole of market. Everyone will assess customers and clients differently and give you that amount. So if you're buying your first home and you're out there and you're not too sure as to what particular price bracket you'll be looking in, go and get that opinion from someone who can go to all the banks, because it can be very, very different. And that also factors into limited company and sole traders. So I'll show you a case study in a minute where the banks will assess those people very differently. You may think, well, they're both self-employed. They are assessed differently in terms of what they can actually use for income and sustainability of their income, which is around dividends and net profit. What documents are required and timescales. So looking at SA 100s, tax returns, tax calculations, overviews, limited company accounts, what's going to be needed to get that moving forward and what each bank's going to actually require. It is very different. And again, there's another case study to show that a little bit later on, because there are banks out there who will go for accountants' references. So we'll be able to get those all moving forward with templated versions of accountants' references for each lender, which are different. Income multiples. That's more along the lines of in terms of employed and self-employed is very different. So Nationwide have a first-time buyer mortgage at the moment where they will lend an applicant, providing they're earning £30,000 a year, 6 times the income, which is brilliant. If you're self-employed, tough, you can't have it. So that's where we will look at obviously getting all the options together, because if you were to go to Nationwide, they'd be saying, oh no, 4.5 times. Losses and projections. If businesses suffer losses and projections due to various things, if there's a case there, we can talk to underwriters and build a story and work out obviously if it's the right thing to do. You could have things like they may have invested in the business, bought new assets, may have had a loss due to certain things that happen health-wise, things like that, that we can say, well, there's a common sense approach there, let's see what we can do. Which then moves into shares of the business around whether you actually are classed as self-employed or employed by a bank, because that can be dependent on your shareholding. And there are banks out there who will say single year trading is acceptable to them, providing they're in the same line of work. So if you're a dentist, you go self-employed, you do 1 year, there are places out there you can go to based on that single year. Whereas, again, coming back to me at NatWest, 2 years. If you're then told you need 2 years and you don't look elsewhere, you're like, oh, goodness gracious me, I've got to go and rent for another year, for example. So, first case study I'm just going to go through is with HSBC. This person came to me to look to help them as they were coming towards the end of their mortgage term. They were on an interest-only mortgage, which meant they were looking to have to sell the property within the next 12 months. What they were looking to do, and they weren't able to get this over the line elsewhere, was to remortgage onto repayment so they didn't have to downsize. They'd lived there for over 30 years. It was the family home. HSBC were a little bit different to other banks because they were able to use the net profit within the business after corporation tax on the accounts. So where you're looking at salary and dividends with a lot of banks for limited company directors, they're a little bit different with that, is because they will look at the net profit instead, which is what was great for this person, because they didn't need to take that much money out of the business, so they were saving it on the tax bill by keeping it within the business and being penalised by the other banks by saying they can't afford it. We went to HSBC, who were also able to use the most recent year's figures, I believe. I have to double check that, but I'm sure it is the last recent year's figures unless it's changed. And they were also able to use pension provisions, which means we could extend the term right the way out until the person's retirement age, which can be later because she's a business owner. Because of that, HSBC were able to offer the borrowing required to be able to get it over the line. She didn't have to sell the house, which was brilliant. You can see here on the screen here that we use, there's a lot of information here, but just to give you an idea, this is a tool that we have called Mortgage Broker Tool. We can put all sorts of wonderful figures into here, which tells us the banks are and what they're able to lend us. And it is all very, very different, especially for self-employed. Employed, especially because employed, you'll have things like commissions, bonuses, overtimes. But with self-employed especially, you can see here, when you're looking at salary and net profit, this person had net profit in the business of £120,000. They were only taking about 25 grand out in dividends. You can see there, down at the bottom, Santander are only able to borrow £205,000 to this client. HSBC, who did an average of the 2 years, sorry, not the most recent year, were able to borrow £593,000, almost treble. And Accord at the Yorkshire Bank, who are part of the Yorkshire Bank, they were able to borrow, because they used the most recent years as well, £621,000. Over 3 times the amount of Santander, NatWest and other banks who are below them, because of the client's age and because of the way they calculated it. That's why it's very important to just speak to somebody, because if you just go to your existing provider, for example, it's not something where they may be able to help, and it definitely isn't the end of the road necessarily. Case study 2, first time buyer trying to work out in terms of what they're able to borrow. What they're able to borrow, because they're going to go out there and try and find their first home. With this, they had the 2 years as a sole trader, but they were previously employed as a dentist, but the 2 years as a sole trader, year 1 had challenges as to where it wasn't showing a great profit profit for self-employment. Year 2 was much, much better as they got used to the business and didn't have as many things to do as their first year in a self-employed role. They also had pension provisions, which meant you can actually go as far as a 40-year term with borrowing, which improves, again, the amount of money they can borrow. It's not saying that they've got to go out and spend £500,000 on a house. It's just basically showing them where they can go to if that's where they want to go to and where they find the right place for them. Coventry Building Society are able to use the most recent year for self-employed sole traders, £247,000 for this client. Nationwide, £168,400. So if they went to the nationwide based on the advertising showing that they could get 6 times their income, they're miles behind. Again, they may think, well, £168,400 isn't enough to get me a 2-bedroom house here. I'm going to have to rent for another year to get a second better books. Not necessarily the case, because we can use an accountant's reference along with the most recent year. Right, okay, finally then, the third case study. This just completely blew my mind. First time buyer offer accepted, limited company director with 100% shareholding, had been 7 years trading as a graphic designer, this person. But they had no accounts available because their accountant was incapacitated, suffered a stroke, was in a home, unable to do anything with the records. He was unable to get any sets of accounts. The only thing we could get was financial statements from Companies House. He had a new accountant who weren't able to get anything. We wrote off to HMRC and we were able to get the company tax return. But NatWest and a lot of, if 99% of the banks would say we need the accounts. Couldn't get the accounts. Halifax, we're happy with that. We're able to get, because they use literally the tax calculations and the overviews, whether you're sole trader or limited company, they were able to use the salary and dividends without the need of the accounts. They were the only lender out there that could do it. And they were also able to disregard the fact that the customer had 8 months left on a credit commitment, which was finishing within 6 months of their planned completion. So they were able to borrow the amount required on the basis that that was going to be repaid in the near future. And that was literally the only place we could place the case of that person. So again, if you've got an accountant, see what provisions are in place. If you are, look, if you're, especially if you're a mortgage holder, if you've got a mortgage at the moment, even if you're tied in and everything like that, just see what provisions are in place if anything was to happen, like incapacity and stuff like that. Finally, then, just a bit of information around interest rates. You may hear in the news that interest rates are coming down. The Bank of England are reducing interest rates and everything's all in great order in terms of doing my mortgage. I'm going to wait a month for this or 6 weeks for that and then look at it again. No. The SONIA swap rates are what determine in terms of the wholesale market around the fixed rates, which shows what's going on with the fixed rates at the moment. They're actually increasing across the board. So if you're looking at, this is September 11th, 2025 compared to August 2025, they're on the way up about quarter to 0.3–0.4%. If you have 6 months left in your mortgage or less on a fixed rate, have a look at it, see what's out there, get something locked in, get it secured in case it goes up again. A good advisor will be able to get you the better deal if rates come down. And if rates decide to continue to go up, you're going to have something locked in and secured. Okay. In terms of connections, people who I'm looking to work with are limited company directors who are paying life insurance into their personal bank accounts or have who are looking potentially to have sick pay as part of their limited company expenses around income protection. If anything's if they're limited company directors and that's going for a personal bank account, reach out to me and let's see if we can get something that's a little bit better for you. I'm also looking to work with accountants, estate agents, estate planners and business owners so that I can offer a world-class service to their customers. And that's me. Thank you for your time today. Has anyone got anything they want to ask me? Thank you. Go for it.
A couple of points. Obviously, the one example of the accountant missing, but that's just a reminder that as a director, it's always your responsibility to keep hold of your records and filing and stuff. So don't just assume that you can bring someone and be able to produce you some accounts within a couple of hours. It's not going to happen.
Absolutely.
The second one was more of a question. Do you do bridging?
I don't. I work with someone that does. I don't specialise in this sort of.
So much of it.
Yeah. No, bridging and